All right, welcome to Fearless Business. It is great to have you here and to be here with you every Sunday morning, East Africa time, but also wherever it is that you're watching this. It is wonderful to have you here on Fearless Business because this is the place where we have the conversations you will not have anywhere else. I hope that you have your friends watching this, your family members, your colleagues, your team members engaging in this conversation because this is about transforming business culture from just doing business for money to doing business with a kingdom mindset. My name is David Sijenyi, and I am the host of Fearless Business, an initiative of the Mavuno Church movement, and it is a mindset transformation conversation as we begin to see ourselves not just as business people, not just as marketplace leaders, but as those that have been called for a very specific assignment around kingdom business. We are here to expand the kingdom of heaven, and we are here about engaging in business with a mindset of actually leading people back to God, but also creating thy kingdom come and thy will be done here on earth as it is in heaven. Over the last 2 episodes, we've had conversations about investment, and we started by just understanding the journey of an investor from an architect to a real estate investor, and taking that further into understanding what really is investment. And as I promised last time, today we want to clarify, how do I get my objectives right? How do I begin to clarify my investment objectives if I am choosing to invest? The last time we spoke about this, we said investment is only valuable when your objectives are clear. That will determine where you invest, how you invest, and so on. And to have this conversation with us is none other than this gentleman that you know already. He's been with us for the last 2 episodes. Ladies and gentlemen, James Kaniaru. Karibu sana.
Thank you, Pastor CJ.
Hey, looking very sharp today.
Great to be here. Thank you. I'm trying to look like you.
I am absolutely flattered. Today, we want to really help our listeners define why they invest. We talked about objectives the last time, and I've really enjoyed the conversations that we've had so far. And the critical question we are asking here: why are you investing in the first place? Because when this is not clear, then you will find yourself making the wrong investment choices and the wrong investment decisions. Why? What's the why behind investment, James? And what are the most common reasons why people should invest?
Thank you once again, Pastor CJ. It's been great being here for the last 2 weeks.
It's been awesome,
glad to be here again. And thank you also to all those who are online. Let me put this in for Pastor CJ. If you haven't subscribed, please subscribe. Please post a comment. Please let him know how they're doing, what you'd like to see more of on the show. And
you're becoming a natural.
Yes, I am. I've been here for 2 weeks. I think by now I should have caught
I love it.
Right. Yeah, but just going back to your question. Ultimately, an investment objective centers around something called an investment goal. We invest because we have a particular goal in mind.
Something we want to achieve.
Something we want to achieve. So it could be, I think in the first week we're talking about your fridge, your freezer that needed replacement.
Are you going to go back there?
No, we need to go back there.
Yes.
It's a good example of just a short-term need that you may actually have.
I remember, in fact, it's interesting that you say that because I think it was just a few days back when I was just thinking to myself, I really need to go back to my portfolio around the short term, the
Right.
mid-term, and the long term.
Right.
Because some of the things we're talking about earlier are really because I've not quite paid attention to some of those things. And so it's interesting that you take us there. Yeah. So
Right.
it's a good short-term investment.
Yes, yes. I'm assuming, of course, when you talk about your goals, you've already met your rent, food, etc. Those are decisions you've already made.
And maybe just to turn those into actually the basic needs. Huh?
Yes.
Shelter, clothing, food. Those are critical.
Yes.
And internet.
Yes.
I like
Never forget internet.
Never forget the internet in the 21st century.
Right.
Yes.
Yeah. And so you may have certain needs that, and these would probably be those that do not recur on a monthly basis.
That's right.
But could be in the proximate future.
Yes. A few months.
For example, university education tends to be a big one.
That's right.
Here, high school education.
That's right.
I think if you ever had a child going to transitioning from primary to secondary school, and the costs involved there, it's significant.
Right.
You could have your children's education. You could also have your own education. I believe last week you were talking about the importance of retooling and reskilling.
Yes.
You could want to go and get your master's or get even your bachelor's or train in a new space. And that usually does require quite a bit of money, more than what you would have coming in on a regular basis, so that you then need to plan for it.
True.
So,
I mean, not too long ago, we were bidding for some project, and one of the things that became very apparent was that for a certain level of work,
yes,
certain level of higher education, postgraduate education, for example, is important for you to get certain jobs. So
that's right. That's right. So education is one that I can think of. It's close to Kenyans' hearts. We love education here, which is a good thing, which I think is what part of what has made Kenya also a very attractive investment education, investment destination, because of the level of education of the population.
And even as you mentioned that, there's now a lot of investment coming into this country targeted at education.
That's right.
Where people are buying schools, investing in schools to grow their capacity, because it's a big thing.
It is.
Yeah.
It is. It is.
I mean, there are people from our neighboring countries that actually
send their children here. Yeah, that's true.
We need to get that act straight, though.
Yeah.
As a country, I think we need to get our act together around that. Yeah.
I think it's just recognizing some of the strengths that we have, because we've invested historically. I think this country has invested significantly in the education sphere.
That's right.
And the results are evident. And I think now even building a speciality around education is something that you can actually do.
Okay. So we're talking about the short term.
So we're talking about just investment goals. So what's your goal?
Investment goals. Okay.
Is education your goal? Yourself, for your children, etc.
Or some relatives.
Or some relatives.
So that they can stop being your burden.
Exactly.
Hopefully.
Yes. There could also be that investment.
No guarantees.
No guarantees. Never any guarantees. There could also be that one thing that you'd want to do. I know for many people in employment, stuck in employment, and I know because I called that we were here when we were setting up our first business. I was talking about it in the first week.
Yeah.
And we really wanted to set up a new business. And in order to put together the capital for that new business, we needed to actually set. So that became a goal. I need to save because I'll be transitioning out of employment into a new business. So I need to set aside the capital I need to, get an office, get a bit of equipment, etc., set up and all that. So setting up a business could be a goal. One of the biggest ones, I guess the third one I could mention, is just retirement, because for many people there's a recognition that employment is not forever.
Yes.
In my parents' time, you became permanent and pensionable, and my dad entered government and left at retirement.
Yes, my mom did the same.
Exactly.
Yeah.
And then it sort of has changed. Now I've probably been, I think for myself, I've been maybe through four jobs. I've done a bit well. The other day I was sitting with
Are we counting jobs?
Talking to a younger person.
Yeah.
And they told me that once they've been in a job for 12 months, they don't see what else there is to do there. And in their they said in the last 12 years, they've actually been in 9 jobs.
In 9 jobs.
And
Well, that's closer to my number.
It is, huh?
Because I think I did 10 jobs in my first 10 years.
Wow.
I worked for about 10 organizations in my first 10 years of employment.
Amazing.
And in some of those, I was there for 3 years. And some of those, I was there for 3 months.
Oh, I see.
But also, I think that's a very critical thing.
Yes.
Because I was looking for something, I was chasing something, and I wasn't even clear about what it was at the beginning.
Right.
But in later days, then I came to understand it. In that pursuit of a steady, sustainable income, I went looking with misunderstanding just around stewardship. I went looking for the next best thing.
Right.
And also I got bored very quickly, which is a conversation for another day.
Right.
So very Gen Z behavior, but yes.
But it's very good. I think for curious people tend to be very restless.
Yeah.
And I think the work environment now accommodates that a bit more than it did in the past.
But what's interesting, James, just going back to a conversation we had in our first episode together, is somehow that has really helped me in my role as a consultant. As in,
you've
as
got
a
all this array of
experience.
Yes.
I can speak in very different environments. I can understand different dynamics.
Right.
And that has really helped me in my role as a consultant, the capacity building space.
Yes.
Because then I saw the challenges that people went through.
Yes.
And anyway, so just talking about, so understanding, are you shifting jobs? Are you changing roles? Yeah.
Right. And so retirement, I think it's, even for the person who does 10 jobs in 10 years, over your lifespan, you'll find that we do have a cap in terms of, I believe the Employment Act does set a retirement age, which is now, I believe, 60. Doesn't mean that you have to retire at 60, but in most, whether you're in public sector, many private sector companies, at 60, you have to call it a day
and it's really
go to a new stage.
And the whole retirement conversation is a spelling thing, eh? Whether you spell it with a hyphen between the entire or not.
True. But I think there is a realization that ultimately something will change and something will shift. Hyphen or no hyphen, and you will then you'll probably move from a place where you're having steady income to maybe living on a much lower income, which is a retirement, maybe a pension or something, and yet your needs may be a bit higher than that. And especially, I believe as you grow older and health circumstances do change, not always the case, but often that is the case, that becomes a very big challenge for people who are growing older. How do you meet your health needs going forward? So I think there could also be people in unique circumstances. Maybe you started a family a bit late.
Yes.
So your retirement, you hit 60 and you still have a grade.
You still have
a grade 6.
Yes.
Or a grade 10, even if it's a grade 10 pre-university. And therefore you need to actually then also plan.
Which can be a major cause of anxiety.
It can. It also comes with its own interesting challenges also, because also when you are working, you can rent where you live. What happens when you retire? So for many people, some of those become a real issue of part of the goal for retirement. I need to find a place to live. I need to have a particular income. So objectives in terms of the first area of real need is, what's your investment goal? Am I saving for education? Am I saving for retirement? Am I saving for entrepreneurship, to start a business? All those goals become important, because then they give you a focus to the next stage, which is, what is your investment horizon? What time frame are you talking about? Are you looking for some things like again, going back to the freezer example, that may be a short-term need. You want to have this thing, a new freezer in the next 12 months. Or you need to change your car in the next 3 years because maybe of age, you've been spending a lot on repair. So you can then, that time frame then already means that you'll be investing very differently from someone who's investing for their child who's entered grade 1, who's going to be in university in 12 years' time and is saving for an education need. That becomes a slightly longer term. It's not a short-term need. Or a young person who's probably mid-career, but now sees the reality of retirement is approaching, and is thinking, I have another 20 years before I hit 60, and therefore I now need to start thinking, where will I live? Just that shelter conversation. How will I generate enough income to sustain me in retirement, etc. So you have your goals, and your goals happen within the context of a time horizon. Are you short-term, medium-term, long-term?
Long-term.
Yes.
So as you're thinking about your investment, I'm hearing you talking about needing to take time to appreciate where you're at,
Yes.
and then looking at where you want to be in a particular time. For many people, the whole conversation about goal setting is something we've had
Yes.
a lot.
Yes.
But truly speaking, many of us don't even understand what that is. And a lot of our goals are from a point of, at the beginning of the year, I set some goals I want to achieve.
Yes.
Many of those never get achieved. And so the question here is, how do I begin to determine what my goals are? What are some things I need to consider as my goals? Because if they're going to impact my investment choices and decisions, then how do I go about just refining that?
Yeah, that's an interesting question, because I often wonder whether there's a set formula for establishing the goals. I tend to think of it more as a iterative process, that you start somewhere with what you feel is a major need for you at a particular point in time. But then I think as you become more and more aware, or as you progress in whether it's career, whether it's family, whether it's ministry, as you progress in that, I think you get more and more clarity. So I think the challenge is usually just starting and just saying, let me just set a goal. And one of the best places to start with is the shorter term goals, because those tend to be a bit clearer, the needs tend to be felt a bit more, and it's you have a very sort of limited time horizon within which to meet it. So when you do set goals and get good at setting even short term goals and meeting them, then that sets you up for then thinking beyond the short term goals to the medium term goals and even to the long term goals. So I think where you are, just start. We all know we have a particular need that is not met by my monthly flows. I need to set aside for. So set those small goals. Don't set many. Set one, meet it. Set another, meet it. And then after a while, it becomes a habit. You actually form the habit of setting goals.
And I like what you're saying, because I think sometimes people get overwhelmed by thinking too far into the future. But I like what you're saying about starting just where you are. There are certain pressing issues, and sometimes I think one of the realities of life is it becomes very difficult to think creatively or innovatively and think into the future when your current situation is really pressing and compressing you.
And maybe I think, if I see where you're going, because one of the things that I think is pressing a lot of people now is just the reality of debt. That a lot of people are actually in debt. And I really like what Pastor M taught us. He taught us about 2-3 years ago about getting out of debt, the importance of getting out of debt. Because once debt actually steals your future. We take debt because we how do you call it? We presume on the future. We picture a certain reality that may not happen, and we think because this is going to happen, kwa sababu niko na kapesa mahali na ngojea kapesa mahali, let me borrow from here, and that is going to actually feel there. So debt usually is one of the most crippling. I think we cannot even have this conversation, Pastor CJ, if people are in debt, because then debt is just you're so hamstrung. You cannot even move.
That's interesting.
One of the short-term goals you could set, and Pastor Emma, I remember set this for us, it must have been about 3 or 4 years ago, because I even questioned myself and I said, yes, I do have a bit of debt here. I had a small residual mortgage, and Pastor M challenged us to get out of debt in that 1 year. And I thought, okay, why am I keeping this debt? It doesn't make sense. Why don't I just save up and pay? So what I did is that every month I saved up and paid it down, so that in a few months, the amount was actually paid off.
Interesting.
And that was a good goal. And then all of a sudden, whatever used to go for debt service was available.
Was now available
for investment.
Yes. I love it.
Yeah.
I think that really brings it home, because I think it's very easy to get overwhelmed by the thought of, I need to start investing and do all these things with this money, little money that I have. But I think what you're saying is, if you can get the pressing matters out of the way, and there's a whole conversation which we have with Alex and Vera, who run Moran Capital, around just eliminate the debt pressure. And there are various ways you can deal with that. But one of the ways is just set money aside and deal with it. Clear it out, so that then you have whatever you've been paying towards the debt, then you can set aside. But one of the things that straightforward financial growth teaches is when you're setting something about a money management plan. And it talks about allocating money to different things. And while sometimes you want to clear something quickly, straightforward financial growth talks about 20% savings, 20% debt management, especially if you're in debt. And so that way, you're accelerating your savings, but you're also accelerating your debt management. Of course, those percentages can change depending on your reality. But what you're doing is you're eating at the debt, but you're also increasing your investment. Now, what you could do is that after a year, when the money comes through, you may realize you have enough to clear off the balance of the debt, clear it off, and then now use the 40% to quickly accelerate your investment again.
That's true. That's true. I like that. It actually works well.
So, misalignment. Of course, many times our motivations are pressure and comparison. You hear, James has land, and it's in a certain lucrative area. Same, I'm gonna do the same thing. What happens when your investment decisions are driven by pressure or comparison?
I think when your investment decisions are driven by pressure and comparison, you will always be looking outside, because someone will always be ahead of you. Someone will always be doing something different from you. So you never really get to settle. Yet the reality is, for each of us, we do have goals that we should be thinking about. Because you know yourself, you know your family circumstance, you know your work circumstance, you know your business circumstance. The circumstances surrounding you, and they're very different from the circumstances surrounding others. So you cannot adopt someone else's investment goals. You need to have your own investment goals. And I think that is actually one of the biggest pressures we actually face. I mean, FOMO is real.
FOMO is real.
FOMO is real.
People are making money over there.
And I'm here with these goals of mine which are not moving. I'm trying to pay back my debt. And other people are moving. But the reality is, if you don't pay your debt, you'll never be able to.
And FOMO here is fear of missing out, just in case you've been wondering what this is all about.
For older audiences, like audience members like you and I who know.
Get it. So that's interesting. And I think maybe just talk a bit more about that, because I think a lot of people have put their money into investment opportunities. I say this with caution, and ended up burning their fingers or not achieving the same results as the other person. And I think that's that aspect of being misaligned, where you just saw people investing in a certain area, you heard there was money in a particular area, no homework done, no research done, no understanding, no alignment with goals. And then you find yourself having spent money, and then in a short while it's not working for you, and then you say investment doesn't work. And I think that's an aspect that is critical for us to consider. Something about determining the right investment. How do we go about? So we've come up with the goals. We've identified what the goals and opportunities, what our goals and objectives are. How do I begin to evaluate and say, this is probably where I need to put my money?
I think investments will do certain things for you. And if I can think of them broadly, probably I'd say there are three things. An investment can be income generating, which means it gives you current income. One of the best examples of that
is it gives you cash on a regular basis.
Cash on cash. So you put in cash and it throws out cash over a period of time. So I'll take this, for example, as, because cash itself, if you keep it in your mattress, will not generate you nothing, but a bit of dust. If you keep it in the bank, it may generate you a bit of interest. It will be very limited interest, but it's better than keeping it in your mattress. Even if it's giving you 1-2%, it's better than nothing. If you put it in, if it's a larger volume of cash which you can put in fixed deposit, it will give you slightly higher cash. If you can lend it to the government,
7%, 9%,
yes, 7-9%, maybe fixed deposit now at about 5-6%.
Okay.
If you lend it to the government will pay you 7-8%. If you do it within a period of a year, or if through what you call treasury bills. If it's for longer than a year and you go to treasury bonds, you can get into double digits. But right now where we are at is a low double digits. You can lend it to companies. Recently, I believe East Africa Breweries issued what you call a bond, which is a way of raising capital, which gives you usually the government rate plus a small percentage above. You can also lend it to very high grade, but I do not advise anyone get into the Shylock business.
Yes.
So you can actually lend cash, and the cash creates. But basically, for bonds, fixed deposits, treasury bills, and all that, they just give you a cash return. They give you current income. There are also certain investments that can also give you a cash return. But the income ones, basically, what is the plain vanilla income? What's good about it is that many of them you'll get your cash back quickly. So if you want a treasury bill money quickly, you can get it back. You can discount it, or you can sell your treasury bills, you can sell your treasury bonds. So you get your cash back. That's what you call liquid cash generating investments. You could also have illiquid cash generating investments, where it's not easy to convert it to cash, but it will generate you income. One example is real estate. Because if you do invest in good real estate, like a rental property, every month your tenant will pay you cash.
That's right.
But it's very hard to convert that unit into cash if you need it for short term. So that, I think, sort of points to the fact that you can have income generating investments. You want them to be liquid if it's for a short term goal, and you can go illiquid if they're for longer term goals, because then you don't need to convert it quickly into cash. So income generation. Second, capital appreciation. Why it's such a bad idea to put your money in your mattress is the fact that every day, regardless of what you do, something comes and bites a bit of your cash, and it's called inflation.
Oh, I thought it was mice.
Those could also bite, by the way. Yes, you're told don't put your treasures where moth can destroy. So that can actually also happen. But inflation, I think, is the most pernicious enemy, because its effects are so invisible. 100 shillings, in fact, everyone says this after COVID. You used to go to the supermarket with 1,000 shillings and come away with a small basket of goods. After COVID, you'd go to the market and 1,000 bob actually gets you almost nothing. So money continues to lose value in most cases over time. And why you need some of your investments appreciating in capital, why people look for that is because they're trying to why they look for that big uplift when they invest is they're really trying to outstrip inflation. They want capital appreciation out of it. So capital appreciation is also a very important factor, especially if you're investing for the long term. Because 1,000 shillings, if you're able right now thinking I'm living on 100,000 a month, my family and I, when I retire in 20 years' time, that 100,000 will probably have to be 300, 400,000. So if you invest it and set it aside now for the future, at that time, it will have less purchasing power. We'll be able to buy fewer goods with the same amount of money. That's why in every good investment portfolio, you also want to invest in certain assets that have capital appreciation. But remember, capital appreciation happens, you want capital appreciation especially over the long term. I don't advise people to invest out in capital appreciation assets, which are gambling assets, because that's also capital appreciation. I put in 1,000 bob, I gambled and I got 5,000 bob, because then some of them tend to be very risky. They're not really backed by anything. So it's really a gamble when you invest in them.
And you're not talking about gambling.
No.
You're talking about some things that people invest in currently, but because maybe just unpack that gambling for us, where you're investing in something, but it's like a gamble.
I think when you invest in something that has an extremely low chance of success, that is purely speculative.
Yes.
So it is not an investment in anything real or of value. And where basically you're actually making a huge amount because other people have lost a big amount, then that is really gambling.
And are there certain investment classes that maybe you could give us an example?
I think there are a number of very highly speculative investments.
Yeah.
I think of the ones, and this one I'm going to probably your comment section may be flooded with some of them, but I tend to, and it may just be the generation I come from, tend to have a lot of problems with crypto currencies, for example, because I'm still not clear what exactly they represent.
Yeah.
Yes, there is a bit of scarcity there because you have to mine crypto, etc. But what is it? What does it back? And it can't just have value because it's scarce. It needs to have value because it has utility. Utility and scarcity together give something value. So I have a problem, and this is just me. This is not investment advice I'm giving. I'm just saying personally. I struggle to figure out what crypto is all about. And I understand blockchain and what it does, and I think that's an excellent architecture upon which you can actually build very good decentralized finance products. But I struggle with crypto as having value. Bitcoin is now up, Bitcoin is down. What exactly is Bitcoin? And what does it do for you?
So I'm hearing also an aspect of if anything promises high return, pay attention to what it is you're putting and be ready. I think this is the aspect also when investing, and I think probably you could speak into this. Where to put your money and how to put your money and to allocate your money and resources. I think the conversation on the objectives has come out very clear that don't just put money where people are putting money because that's where people are putting money and because it promises a high return, but it needs to align with how I like the breakdown. It needs to align with what you want to get out of it.
Your goals.
I like the breakdown of the liquid and the illiquid.
Right.
I like the whole conversation around making sure you're not losing money. And I think is it the Japanese or the Chinese who say making money is like losing money is like pouring water on sand. You can see that image.
Yes.
Quickly disappears.
It does.
But making money is like digging in the sand with a pin. It's very difficult to get anything out of it.
It is.
And basically what they're saying is that pay attention. I think it's the richest man in Babylon that says money what does it say? Pay attention to where you're investing your money so that you don't lose it. Otherwise the money will run away from you. So
I think my view about losing money is that because the future is uncertain, not all effort is going to bring about a reward. And my encouragement to anyone who's investing is to recognize that investing is risky. And that risk has to do with, and this is actually a very important issue when you're also looking at your objectives. What is your risk tolerance? Can you tolerate risk? Are your goals far enough in the future for you to tolerate up and down performance? Because investments do go up and they do come down. But can you tolerate that? We call it in investment volatility in terms of returns. So that if, for example, you've bought a house and it doesn't have a tenant for 3 months, you're not panicking and trying to get rid of it because you're holding it for long enough in the future. You know, maybe I won't have one for 3 months, but then I'll get a tenant for 5 years. So risk tolerance is also very important because if you don't understand your risk tolerance, then you can't invest. In fact, many of the banks and investment banks and sellers of financial products will often ask you before they touch your money to invest on your behalf, what is your risk tolerance? if you put in money, if you put in 100,000 today,
Yeah.
and your investment is worth 70,000 in the next 3 months, will you sell it? They ask you that question. They want to find out, can you tolerate up and down? Because it could then go down to 70,000 in the next 3 months and then be up to 150,000 in 2 years' time. So risk tolerance is part of your investment objectives. There are some investments that are good for you because you can tolerate the risk. Why? Because your goals are not proximate enough for you to then need to pull out cash at the wrong time. And then there are some where you, your goals are so far in the future, or you have other resources that you're depending on, and not just this one investment, so that you then are able to tolerate that up and down performance. What the risk tolerance also helps an investment advisor determine for you is then how much do we need to diversify your investment, because diversification then is what sort of means that if part of your portfolio is up, another part is down. And it's what makes us, because we don't know the future, that's why we then do not invest in one thing. We invest in a series of things that achieve different parts of our goals and meet our needs at different times going forward. So a good investment portfolio could have very liquid investments. You could have cash. One of the first goals I tell young people when you start your job is save up 3 to 6 months of cash, so just to meet your emergency, so that not everything in life becomes an emergency. So that if you lose your job, if you have a big expense, you actually have a bit of cash available in a bank account. Before you've done that, then you can't be saying, oh, I'm putting all my money in crypto, and you don't even have an emergency fund to meet some of your requirements. So you must have part of your portfolio that's in liquid, low return, but is available to you. You can have some which is slightly higher return, slightly less liquid. You may sell it and take a few days to get money market funds. For example, you get your cash back in 2 days. If you've invested in bonds, depending on how liquid the investment is, you can get your cash back in a week. Also, you can get your cash back for some in 3 months. You need part of your portfolio to do that, because there are certain short-term or medium-term goals that need cash quickly. And then there are the long-term goals where you can afford more illiquid. In fact, for some people, if you invest in something like Bitcoin, I'd do it for the long-term, not for making money today.
And we're talking long-term, several years.
Several years into the future. Then you can go up and down with the volatility. If you have conviction that it's a good investment, I'd say, put part of your portfolio in it as well, but do that to meet needs that are in the future, not needs that are, you don't need cash to get yourself admitted to hospital, for example.
So for the person who's just listening to this and saying, okay, so where really do I start? I probably haven't done this before. There's that person. They've never done it before. Where do they start? Then there's the person who has followed people. They've been them, they had put money in the money market. So they put money in the money market. No objectives, no nothing. Then there's the person who probably was taught how to invest, or was told to invest. You always put money in this. They've done chamas like you guys did. So where does someone start? Then we could either focus on the different categories. So let's start with the person who has never done this before. Where do they start? They don't know what the market looks like. They don't know where to start.
I think the simplest place to start is first, and I hope it doesn't sound spiritual, is starting, the first place to start is, of course, taking an audit of where you're at, because you can't know where you're going if you don't know where you're at.
So assess where you are.
Do an assessment. And even when you go to meet an investment advisor, that's where they'll always start. So where are you? What assets do you have? What liabilities do you have? What do you owe? What are some of your future aspirations? Where are you going? What
and ask the right questions to gain clarity on this matter, or what these things mean.
Exactly. Then you have a full audit. And with many of the investment advisors in the market, they're able to actually give you that assessment of where you're at and help you also sometimes clarify. There's actually a field called investment counseling, which is actually talking to people if they don't know. You actually can talk to a resource who helps you sort of surface some of those by them talking to you.
Interesting.
In sessions. So it's almost like therapy.
Wow.
Talk to you in sessions, they actually are able to begin to surface what are the things that are important to you, what are the things that are not important to you, by asking you the right questions. So there may be value in, if you're not able to do it yourself, to actually have that session with an investment counselor. Please avoid someone who's trying to sell you a product, because they could be in many cases, and that's why here the market isn't very big, so a lot of the investment advisors you find are attached to someone who's trying to sell you a product. Globally, there are a number of guys who do investment counseling, who are then able to sort of help you just clarify a lot of those try to sort of help you understand even your money personality, who you are, what your objectives are, what are the things that are important to you, what are not. So that audit is really, really important.
So start with the audit.
Point. Yes.
So just understand your landscape, understand where you are right now, understand what I think it was Sam called your current reality.
Yes.
Understand your situation, understand your exposure.
Right.
And then based on that audit, then what?
And I think also understand where you're going.
Where
what
you
are the things that are important to you?
Yeah.
And that's part of investment objectives. What are the things that matter to you?
And I like that question, because with that question, you then extrapolate it beyond the here and now.
Yes.
What are the things that are important to me? I want to live in this. Somebody once asked, one of the questions normally we ask children, what do you want to be?
Yes.
I think, and they were just suggesting, probably we need to change the question to what kind of life do you want to live? Because with the definition of the kind of life you want to live, then you bring it back to, so how do I need to do life today so that I can live that life? It's in the future enough. It paints a picture in the future. So that then begins to help you clarify your objectives.
Yes.
Okay. So do an audit, clarify your objectives.
And go even beyond just that question, because why do you want to be what you want to be? There's always a reason that's driving us. That we catch that vision because it meets a need within us. So I want to be this because these people are seen as successful, so I'm looking at it because of the prestige. So are those things important to you? Is it prestige? Or is it the fact that I want to be a doctor because they look good in white coats, they earn a lot of money, etc. Or someone can say, I want to be a doctor because I really want to help people. So it's going beyond that question and finding out the why. Why do you want to do it? I think a part actually it's called psychographics. What is your mental construct of the future, and why is it important? Sometimes you'll ask people is, if you didn't achieve which of your goals that you've set here, can you not live with yourself if you don't achieve? That will very quickly sort out the wheat from the chaff, and it will tell you what really matters to you, to this person.
Wow. Wow. Then so we've identified, we've done an audit, assessed where we are. We've identified where we want to go. And we've really taken time to decipher why is this important? Why is this thing important? After that, what next?
I think once you then quantify your goals, because your goals will need some resources to meet, whatever the goals may be. So you then go into putting a figure to those goals. If you want to retire at what level? What is your current income? You want to retire at what level of income? When will you be retiring? What will that mean if inflation is running at X% in the future? And then if you now have an idea of what that future value required to hit would be, then you work back to now and say, in order to meet that goal, then I need to be saving X, Y, Z. Because this goal is important, if I save X, Y, Z, and it's a long-term goal, I need to invest in something that over the long term will grow at this rate so that it can achieve that future objective. And you do it for each of your goals, your short-term goals, your medium-term goals, your long-term goals. When you aggregate those in total, then you, in a sense, now have a plan, an actionable plan that says, I need to be doing this now in order to achieve in the short term, in the medium term, and in the long term, those specific goals. So you actually then move from just the statement of what the goals are to then having a physical plan. It will normally shock you when they first do the numbers, because it looks, when they quantify it now, it boggles the mind, because people haven't thought about it, haven't really thought about it that much.
Wow.
Everyone thinks of things sort of move in a simple line, and you don't actually realize how much, for example, inflation eats of your value.
Wow.
How much life would change. For example, if today you are living off 50,000 shillings, what in the reality is, on an inflation basis, based on where our inflation is, probably in another 10 years, you will probably need about 3 times that. And I'm just...
Notice, we are 4 steps in, and we have not talked about a single investment vehicle, instrument. So you can see the work that needs to go into it. It's not something to take lightly. It's not something to try and just do by yourself. It's something that requires some expert support and guidance, and this is available to you. Wow. So we've come this far. We've begun to assess what we've given a number to this thing. What do all these objectives mean in terms of numbers? And then now we need to get into what next.
So what would happen next is that your investment counselor will then sort of look at different areas and say, based on your goals as you've enunciated them, based on your time frame, based on just your own personal preferences,
and current income,
your risk
tolerance,
appetite, how much risk you can take, then we advise. Because often what happens is people want this, but they are really here. That's the reality.
I hope you capture that on camera. Maybe do that again. You want this?
People want this, but they're really here. They're really here. So investment is also an ongoing...
And that's not necessarily a bad thing.
It isn't.
It's just that with the little understanding you have, you then want certain things because of what you know. And sometimes it's half information about that level of investment. But then you need to consider your reality.
You need to consider
to bring back your expectations.
To align it.
To align.
To use your word. Just to align it. You can't get a Mercedes for a Vitz budget. That's a reality. Because then it calls...
Raise your budget or drop your ambitions.
Exactly. And sometimes it just means that maybe you need to also take a longer term view of investment. Because the reality is you may be here now. You may be here now because you're maybe starting off entry-level position. These are the things you'd want to achieve in another 20, 30, 40 years. You'll not forever be here.
That's true.
Even when
I think that's a powerful statement. You'll not forever be where you are today.
Some of the things you can do is you expect even as you work, you'll get promoted and you'll move to a higher level. What that would mean is as you get promoted to a higher level, live below your means, because then that is what creates that that saving that you can then use to save to meet your investment objectives. It could mean the 7, 8 income streams. It's something that you now need to consider. There are many ways you can actually do it. It doesn't mean necessarily that because you're here, drop your expectations. And it could also mean use one of the biggest tools that are available in investing. Time. Time and
it's
chance.
A powerful tool.
Time is the most critical tool that you actually have in your favor. Even when you do an investment statement, we always would advise that you review it regularly if your circumstances have changed. Because you could be in a very steady job, this looks very achievable, and then circumstances change. You may have to recalibrate and change. So it's also a dynamic process. It's not necessarily a static process. And you need to be reviewing your statement every year or 2. Things change also, your circumstances changes, your reality changes, and you want to then align that to your objective so that the two are not out of sync. Otherwise, that tension can be very unhealthy to carry.
So we've got through an entire process, and I'm hoping that you've captured it, and I hope you've been taking notes, because I think it's very critical that as we begin to have a kingdom mindset around how we handle the resources that God has given us, that we also pay attention to the order and the process of coming up with these decisions and these solutions, so that then we have lasting solutions. And I think many times we rush into investment. Many times we do what everyone else is doing. We do what everyone else is doing, and we find ourselves in trouble, and we keep wondering, why are we not getting the same results? They're probably using a portfolio manager. They're probably using a wealth advisor. And you're just doing what they're doing without understanding all these things that go back into them. So take an audit. After you've taken that audit, take time to understand where you are now, and what it is you want to achieve. What is it that's important to you? Where do you want to go? Then take some time to understand your current income situation. Does it allow you to achieve what you want to achieve? And this is whether in terms of taking advantage of the portfolios, but also how much time you require to do all that. Listen to this episode again if you need to, but this is something that will be powerful for us to consider. James, I know some people have made mistakes already. They burned their fingers. In fact, they're probably just recovering from those situations. And maybe let's just, I don't know what insight you'd have for them, and then maybe pray for them.
Okay.
Yeah.
I think two things of insight, and I think you asked this question, but I might have dodged it answering it. I think just a couple of things I've learned from Scripture. And one was the prayer of the psalmist in Psalm, I believe it's Psalm 16, where he says, Lord, you have assigned me my portion and my cup. You've caused my boundary lines to fall in pleasant places. Surely I have a delightful inheritance. And the counsel that Paul gave his son in the faith, Timothy, when he says that godliness with contentment is great gain, because you bring nothing into this world and you take nothing out of it. I think those two scriptures for me have really been close to my heart, because it helps to avoid the anxiety that comes from either the FOMO or the thing of thinking that I'm always very far behind and I cannot make it.
Yeah.
I think my prayer for you as you listen is first and foremost that you'd always recognize that God has a divine assignment for you, and God also has made divine provision for you. That often what, even as the writer of Ecclesiastes says, he allows time and chance to happen to all people. So there is no set timeline. Even as we give investment advice, it's very easy sometimes to think that there is a particular timeline, and once you're off that timeline, you have missed the bus, or that you've missed that opportunity and it's not going to come around again. I think God has assigned you your portion and your cup. He's caused your boundary lines to fall in pleasant places. And I think that should give you comfort to just know that it is okay. It is not late. Even the mistakes, if I made mistakes in the past, that's fine. I can always recover. I may not be where I wanted to be, but I'm not where I was, because I've taken time to even invest in listening to this podcast and listen to some of these pointers, and I can now course correct. We can always correct. God is a God of redemption. He works his redemptive purpose, even through our errors, our mistakes, giving us second, third, fourth chances. So you're not too late. So perish that thought that I'm late and I have missed the boat. And then also to recognize that God also desires for you more godliness first and foremost, and contentment. Because I've seen people follow even these investment rules and investment guidelines and are so discontent in life, so dissatisfied with where they are, because they use them outside the context of godliness. Every divine resource God gives you is to fulfill a God-given purpose in your life. It's to meet your needs daily. He gives us our daily bread. He provides for that, and we thank him for that. But also beyond that, he also has a divine purpose and plan for what he has actually given to you. And all he wants you to do is to be faithful with what he places in your hand. So my prayer and my hope for you is that you will not be discouraged. You will not sort of just get stuck in that place where you feel I've lost my opportunity or I've lost my time. That God allows time and chance to happen to all people. And that because he has a divine plan and a divine purpose for you, And because he is able to put every divine resource, everything that you need for life and godliness, he will avail to you. That you can then, first and foremost, breathe and be at rest because God is for you.
Wow.
Yeah.
Wow.
Yeah.
Are you going to pray for us?
Yes, sure. So, Father, my prayer is that for anyone listening here who feels that they've lost out, that they've missed the bus, that time has passed them by, Father, that you'd grant them the peace that comes from knowing that you are in control. The peace that comes from knowing, Lord, that the plans that you have for them are for good and not for evil, are to prosper them and to give them hope and to give them a future. So, God of all hope, my prayer is that you'd fill their hearts with all joy and peace as they trust in you, and that you'd allow their lives to overflow with hope by the power of the Holy Spirit. I pray that every divine mission that you've ordained for any of our listeners today would come to pass in your time and in accordance with your purposes. That they would know that, Lord, it is you who has granted them their portion and their cup. You have made provision for them, and you've granted them over and above that a delightful inheritance in you. So would your children be at rest? And would your children use even what you're teaching them at this place, Heavenly Father, to help them move from where they are today towards where you'd want them to be. Thank you that you're the God of a second and a third and a fourth chance. And thank you that you will fulfill every of your redemptive purposes in every life of everyone who's listening to this podcast. So we pray that you'd give them peace, you'd fill their hearts with joy, and that you'd set their feet on the right path, even from this point on. In Jesus' name we pray. Amen.
Amen. Well, I hope that this has been impactful for you, that this has ministered to you, and that you are beginning to think about investment very differently, because God is an investor. He invested himself in you. And so there's an opportunity for you to live a life that is impactful, and that is in paying attention to the investments that you're making. Well, this has been Fearless Business, where we challenge you to go forth and be fearless.